What is Jane Street and how did it make massive profits worth over 36,000 odd crore rupees by gaming Dalal Street? And more importantly, why has SEBI now banned Jane Street from Indian stock markets? If these are the questions that are bothering you, then you are at the right place. Let me explain everything that you need to know about Jane Street, which is a US-based trading firm which employs over 2,600 people across Europe, US and Asia. It also trades in 45 countries. And why is it in the thick of action back home in India today? Well, it's known for its expertise in the exchange-traded funds, and it also plays a large role in equities, bonds and options markets globally, using advanced quantitative strategies to drive both its own as well as the client's trading strategies. Now, SEBI, our capital markets regulator, has accused Jane Street of making illegal profits from its manipulative strategies in the Indian stock markets. What has SEBI said? SEBI has also impounded 4,843 odd crore rupees by freezing Jane Street's accounts, marking one of SEBI's most aggressive actions against a foreign firm. But what exactly did Jane Street do wrong? Well, SEBI has alleged that Jane Street would deal simultaneously across multiple market segments: cash equities, stock futures, index futures and index options, but in a manipulative manner. SEBI has identified 18 trading sessions, 15 involving Bank Nifty, 3 involving Nifty 50, where the group has alleged that they were engaged in sharp, large, aggressive interventions across cash and derivative segments. So let's try and understand, how did Jane Street truly manipulate its trades in the stock markets? SEBI has alleged that in a sophisticated, coordinated action, Jane Street would aggressively buy Bank Nifty and the stocks within Bank Nifty and futures in the morning trade, and artificially pushed up the index higher. Then later in the day, Jane Street would aggressively sell all of those positions, causing the index to crash as well. In the interim, Jane Street allegedly also manipulated, primarily involving aggressive morning purchases of Bank Nifty constituents, including HDFC Bank, ICICI Bank, Axis Bank, State Bank of India, Kotak Mahindra Bank, IndusInd Bank, Federal Bank, even Bank of Baroda, IDFC First Bank, AU Small Finance Bank, Punjab National Bank, Canara Bank and Bandhan Bank as well. This was followed by large-scale afternoon sell-offs. It was a coordinated action, all planned up by the entire company, as well as its 4 agencies that were involved in carrying out these trades for Jane Street. Think of it like this. Say, for instance, you buy a cash stock in the morning. You also have a position of futures of the index that represents that stock, and you hedge your positions by also either selling the calls or buying put options of the same as well, which means at the same time you're hedging your positions, but in the interim causing the index to rise and to fall at the same time, and then benefiting from this. Now, what has truly happened? This price movement truly benefited Jane Street's massive options positions, leading them to garner huge profits. SEBI has also observed that Jane Street engaged in similar manipulation near market closing time. So, in case you would have noticed, from April of 2023 till now, we've actually seen a whole host of expiry related volatility that has only been rising. You would have also noticed that up until recently, every single day in the stock market week would be some or the other index expiry. Then, to reduce the volatility regarding the expiries, SEBI, our capital markets regulator, curbed it to just 2 days, Tuesdays and Thursdays. That's what you can have all the expiries on, and not on every day. That was an action that was taken, which means that SEBI was already noticing some kind of an activity that was manipulating or leading to heightened volatility on expiry days. Now, at the closing time, Jane Street would also dump the stocks to pull the index down, helping them to benefit from the short call or the long put options that they had already carried out. So, in the morning, they would buy, in the evening, they would sell, but they would also have the options positions, and that would lead them to make profits as well. Now, let's try to understand how much money did Jane Street make from such profitable strategies. Now, between January of 2023 and March of 2025, the Jane Street Group recorded a total profit of 36,502 odd crore rupees. That's nearly $5 billion. Now, understand some more math. There was a total transaction of about 43,289 odd crore rupees that was earned by Jane Street. But there was also an intentional loss made from this money of 43,289 odd crore rupees from Jane Street as well, which is somewhere to the tune of around 7,000 odd crore rupees. And that, minusing that loss, which it intentionally incurred in the stock markets, doing all these manipulations, the entire take-home profit was to the tune of 36,000 odd crore rupees as well. Now, try to understand this. From this, there are about 4,800 odd crore rupees, that's 4,843 crore rupees, that's to be precise, that SEBI has now identified as unlawful gains and has impounded them as well. Let's now try to find out how did SEBI find truly that Jane Street was indulging in such manipulative strategies. Now, Jane Street first drew a wider attention in the stock markets in India back in the year 2023 when it had sued a rival hedge fund, Millennium Management, in a US court. The case revealed that Jane Street had developed a profitable India-based options trading strategy which had earned it $1 billion in 2023 alone. The two firms settled the dispute later on. But here's how it panned out. April of 2024, we saw SEBI beginning a preliminary review based on media reports that some manipulation on the expiry days was taking place by hedge funds. Then later on we found out, especially in July of 2024, NSE was asked to examine Jane Street's trading activity. Now, August of 2024, we actually saw Jane Street submitting a written response to the SEBI. October of 2024, we saw SEBI release policy guidelines to curb such overtrading on index expiry days. That's Nifty or Nifty Bank. November of 2024, NSE submitted its report, and by December of 2024, SEBI noticed unusually large positions and volatility, launching a deeper probe. It was in February this year, in 2025, that SEBI found signs of manipulation, issued a caution letter to Jane Street already. In May of 2025, Jane Street ignored the warning, continued taking large positions, triggering enforcement action later on. Now, how has Jane Street reacted to this SEBI notice, SEBI interim order? Jane Street has emailed their response to Reuters and said that they dispute the findings of SEBI interim order. They have also mentioned that they will further engage with the regulator, SEBI, by saying that they are committed to operating in a compliance manner with all the regulations in the regions and as they operate around the world as well. Let's try and understand what could happen next. Now, Jane Street has 21 days from receiving the order to file objections and request for a personal hearing. Until then, all restrictions will remain in force, which means none of the Jane Street related entities will be allowed to trade at all in the Indian stock markets. SEBI has also directed the stock exchanges to monitor Jane Street's activity to prevent any further manipulation as well. This case could actually become a landmark in how India is dealing with complex, high-frequency global trading firms and may also shape the future of foreign institutional investing in Indian markets as well. Now, there are some questions that still remain unanswered, even as we have tried to come out with a statement from SEBI saying we will not probably allow such manipulation to take place from any foreign-based trading agencies. But these questions need to be answered. First, is taking opposite positions in cash and F&O markets illegal? There is no such rule that what Jane Street was doing as a strategy is illegal. That's not at all in any rule book mentioned. Now, in case if that is not illegal, then how will SEBI prove that Jane Street's what Jane Street was doing in the Indian stock markets was with the wrong intentions? That's point number 2. Apart from this, we will also have to ask whether our own surveillance systems are now being overhauled to catch the next Jane Street 2.0 in case SEBI really feels that this is detrimental to the Indian investment climate, to the Indian capital markets, to the Indian retail investor, then are our systems vigilant enough to catch if there is any sign of such manipulation taking place in future before a massive damage can actually take place? That's another key question. Now, there is also a key question as to finding out what could be the implication of such a massive trader conducting such massive volumes of trade in the Indian markets. What does the absence of such trader really mean? Now, in this scenario, Nitin Kamath has actually tweeted today. And he mentioned in his tweet, and I'm going to reiterate that for all of you. He says that trading firms like Jane Street account for nearly 50% of option trading volumes in India. If they pull back, which now seems likely because they are under SEBI's radar, retail activity, about 35%, could take a hit too. So this could be bad news for both exchanges and brokers as well. This is what Nitin Kamath has written in his Twitter post today. And in case you have to see a reaction of how some of the exchanges and brokers have reacted in trade today, you will see BSE was down in trade today. You will see many others, Nuvama, Angel One, all of those that are linked with carrying out such large trades from such trading companies have been impacted in today's trading session as well. So that's another key point that we must be knowing. And lastly and most importantly, the key question remains is for us to really find out from SEBI or from the investigation that will be carried out as to what was the impact on the average retail investor of such manipulation that was carried out. Well, we'll leave you at that, but do stay tuned onto Business Today Television as we continue to decode for you such massive news flows that are impacting the way Indian retail investors must see how the capital markets are being impacted. Stay tuned. There's much more coming up for you on your screens on Business Today Television.
If you like the video, do like, comment, share and subscribe.